Good morning, everyone. Today, on our podcast webinar series, I will be joined with Susanne Chisthi, a great friend of mine, founder of the FINTECH Circle and the series of InsurTech and FinTech and RegTech and WealthTech books you have seen out there. Susanne and I will be talking about the state of FinTech, investment entering the sector, the business model we need to watch out, and big tech. So good morning, Susanne. I'm so pleased today to have one of our leading InsurTech, FinTech, RegTech, so many names, influencers. And I look forward to having Susanne talk to us about FinTech, a career, where she is today with the FINTECH Circle, and these wonderful books that she has been putting for us all in the sector. Good morning, Susanne. Welcome.
Good morning, Sabine. Good morning. It's delightful to be here with you. And thank you again for being also my co-editor for the InsurTech book, which we published with Wiley. So I'm very, very happy to join you today in the podcast.
Thank you. So just to show you that I am a follower, of your work. So the FinTech book, first book ever, right?
Yes.
Then we co-produced the InsurTech book. With Nicole Anderson and Sean Neely. And that was an amazing experience. I have quite a few of the MBAs around the world, actually, leveraging the book, utilizing the book for the study of InsurTech and disruption. So that has enabled, I think, a lot of students to find insurance more approachable. So thank you. I also get this one for my wealth management managers within the insurance space.
Exactly.
The RegTech book. Fantastic. I'm sure I missed one, but this is the latest. And you saw my article from yesterday around AI yes. And a lovely, set of views around artificial intelligence and where it is going. So thank you, Susanne, for enabling us to learn.
Thank you, Sabine. Yes, it's for us, our books, the unique thing about them, as you know, is we crowdsourced the best knowledge worldwide, for our books, because we believe in the power of the community and the power that one person alone could never write such a comprehensive book, on the InsurTech sector, for example. It would be impossible. But having, 70 authors globally representing insurance companies, InsurTech startups, InsurTech scaleups, InsurTech thought leaders globally come together, and every person contributes their own expertise, then this book really becomes extraordinary. And so that was our goal always, is to crowdsource, and of course with the help of the editors, and you have been one of our editors, to choose the best authors worldwide to contribute to our books. So that's I guess that's what we really enjoy doing, and what we are very happy that therefore those books have got something really special, and they're also easy to read. They're fun to read. They're not like academic dry books, but they're really enjoyable and easy to digest the knowledge in a short, effective way as well.
So thank you. I would like to go through a little bit of bio, if you don't mind, a bit of an introduction. So I know you very well because of our work with Startup Bootcamp InsurTech. You were one of our mentors and one of our investors for our InsurTech startup. So thank you as well for having supported my portfolio. But there is so many layers to Susanne. Can you tell us a little bit more about you?
Of course, Sabine. So I am Austrian originally, from Vienna. I was studying in Berkeley in the States, for my business school. And then I went back to Vienna to work for Accenture. And Accenture, the consulting company, they sent me to London, for the first time 25 years ago. And since 25 years, I live in London. And after Accenture, I worked for Morgan Stanley, asset management, then for Lloyds Bank, for Deutsche Bank, before founding FINTECH Circle. And FINTECH Circle, the initial idea I had was because when I worked and when I studied, in the Silicon Valley, it was at the time the internet was being developed. And it was at the time, when all the internet companies, the startups were founded, and we talked about Netscape having their first IPO, and I could see the vibrant atmosphere. And in 2014 in London, I saw that happening to finance. I remember that in 2014, we had the fintech startups starting to emerge, and we saw investors coming in. And I thought that's exactly what happened 20 years earlier, changing the life of the internet, But now it happens to the sector I know best, which is the financial sector, and I want to be part of it. And I had been a member of other angel networks, where companies pitch to present to investors for funding. And what I always found is, if it's a sector agnostic angel network, which with many are, often the investors don't find what they want, if they really want fintech deals. Equally, the fintech startups don't pitch to investors who understand what they're doing, because you need to be a finance expert or insurance expert or a technology expert to understand fintech, InsurTech, the sector we are in. And that's why I founded, FINTECH Circle as the first investor network focused only on investing in fintech deals, and all our investors are fintech investors. And this makes it much easier for both sides. And this was, in 5 years ago. And then since then, we've built up our social media presence. So we're reaching, with our social media website and on Twitter and LinkedIn, we're reaching 130,000 people every day, communicating on trends, and communicating what happens in the industry. And we also have written books, as we've talked about, so to share the knowledge which we see happening in the industry, with the whole world, and to make fintech go mainstream. I guess that's, one of our goals is really to make sure that fintech becomes a mainstream sector. And I think at some stage it will replace finance overall. There will be no finance without fintech. There will be no insurance without InsurTech. So that's, I think, the future I see.
And it is actually quite profound what you are saying. No fintech without, no banking without fintech, no insurance or insurers or insurance providers without InsurTech, and so on and so on. So no wealth managers without wealth tech. And what is that saying is that there is pockets within the financial sector who are being disrupted by all those tech enablers, and we are able to move much faster often than our incumbent players, and they have to watch out. So can I ask you, what are the fintech trends you are seeing going to affect us during the next few years?
Yeah, I mean, I see on one side, I see fintech companies going after pain points, which we've all suffered for a long, long time and never ever thought this could be changed by fintech. So I give you one example. When we think about traveling, traveling at the moment we can't, but hopefully we will soon can travel again. And, when you traveled and you bought products in a different country, you could reclaim your VAT back. And sometimes it was large amounts you could claim back for VAT. But I never in my life did that because I never wanted to queue up at the airport, for my VAT receipts. So I never claimed VAT back in my whole life. And now, we're working with one fintech company, which is putting all this online. So you put your VAT receipt, you just scan it, you get the money back online on your mobile app, back into your account. So in the future, I will, reclaim my VAT because I can do it on my mobile phone now. And so that's, an example where fintech really hits the biggest pain points with millions of customers face worldwide, and where we can see a huge impact, on a business to consumer side. I guess on the business to business side, when I think about capital markets, fintech, platform-based business models, we see more and more banks, who really want to work with fintech companies and who want to innovate, and they've got choices. They can hire a consulting company, they can hire fintech companies, they can acquire fintech companies. And what I see also, from a board level point of view, is that lots of banks are trying to figure it out. What's the best way of how to engage, with the fintech sector? And often it's easier said than done. Yeah. It's often the devil is in the details. So when you acquire, for example, a fintech company, the key thing is to make sure it works after the acquisition, that you integrate the company well, into your operations without destroying its spirit. but at the same time, making sure that the whole organization benefits from the fintech's know-how and skills. And those things in practice are really difficult to do because you're matching up to cultures, you're two different types of people. And I think those things is where we see, more fintech companies be willing to work and learn and work with banks, and more banks willing to take the step, jump into the cold water and try, for the first time to engage and work really with fintech companies to benefit from their solutions.
And what you are saying is that the sector is really learning about what is corporate venturing. In my case, I call it insurance venturing. And I'm sure in your case, you may call it fintech or banking venturing, where we are trying to actually make sense as to who we can partner with when you look at the young venture, who we should invest in, who we may acquire, as you highlighted, what are the right capability to start changing a business model, but also what we may want to build as well. So all this comes together to build the business of the future, I assume.
Totally right, and I think often, large organizations, they've got difficulties to build in-house without help. And of course, that's how you come in, Sabine, you can help large organizations to build ventures in-house. And that's, I think, what companies also want, because they want to be able to create proprietary know-how as well, and proprietary solutions, which you can't get off the shelf, often. So it's always a strategy which has to be thought out well, how to innovate and how to make those right decisions, which have got a long-term impact, long-term impact on your P&L. They've got a long-term impact on the culture of the organization. And they also sometimes tie you in, so if you work with large consulting companies, we've seen sometimes these contracts, they can run 3 or 5 years. And so it has to be the right thing for the organization. And that's where I think decision-making at the board becomes more important. So when we think about, our fintech knowledge, InsurTech knowledge, the key thing is that from board level downwards, that everybody understands technology more. But in the past, technology was the role of the CTO.
Yes.
The CTO was responsible for technology. He or she was seen as a cost center, so was secondary, not that important strategically for the business, for the institution. And now this is changing. Now the CTO is strategically important, and technology is everybody's responsibility to some extent. And so it becomes, a mandatory skill set. It's not anymore nice to have, but it's really mandatory, for leaders to understand how technology can shape and also empower and enable, what they do from a strategic point of view.
So when you look at the CTO, I just had a little bit of a chat with a gentleman called Warren Beasley, like the insurance company, but no connection with the insurance company, even though he works in the insurance market. And one thing he was highlighting, as you highlight right now, Susanne, is that the CTO, so his focus is the CTO of the future, is a business person who actually understands how to connect the dot with the company strategy and look at the future of business model to actually start seeing how emerging technology fits within that environment. That person doesn't need to be an expert in blockchain or AI or digital twins and all those great things we are seeing coming to market. He needs to be able to be a great leader, identify the right talent, and be a great connector and a great listener. And when he goes and identify those experts, he actually really wants to understand the company strategy, mission, where they are, where they want to be, and start identifying what are the core skill sets they need to build to achieve that vision, which is what you are just highlighting now.
Yes, exactly. And I would say, diversity is a key thing, for anybody in a large financial institution, to ensure that the team is diverse. That because when we talked about AI, when we think about the testing of AI, the developing of AI, all these pipes almost, which you build, underneath the surface. And at the end, the user will only see the result. They don't understand how they got there. But we, as leaders or as owners of business, need to be accountable that how we got there is the right way of getting there. It's fair decisions are being made, that you don't deal with a black box, in terms of decision making. So when you think about, using AI for loans, who gets a loan, who gets rejected, those things can be very discriminatory if they're coded wrongly, and have to be the right thing. And so that's where, when we think about technologies, how they empower fintech, InsurTech, RegTech, all these other sectors, it's so important to understand and to have a diverse workforce developing those technologies, testing those technologies, thinking about the use cases, how they can go wrong, and how to protect you, maybe with an ethical board, to make sure that you're really doing the right thing long term, and don't increase any stereotypes, so don't deepen any stereotypes, So that's, I think, another layer of making our industry more complex.
Okay.
But we have to be responsible citizens, to make the right things long term.
So, as you know, last year has been a little bit of a surprising year coming into this year. And I would like to hear from you, understand from you, how has investment been and gone within the fintech arena?
Yes, good question, Sabine. And when I think back in 2020, it was a year which shocked us all. I've been in China at the beginning of 2020. I've literally been in Beijing, introducing our Mandarin version of our books, to universities and to businesses there. And I came back end of January from China, hearing for the first time about the coronavirus. And I thought, gosh, luckily I didn't get it when I was there. And then, within 2 months, the whole world, we all were suffering. And I would say, the impact on the fintech sector initially was quite profound, because people and companies, nobody knew what to do. We didn't know what the future would look like. And if you don't know how the future should look like or will look like, you don't know how to plan for it. Naturally, because you don't know which way you want to go towards. Plus, you don't know how long it lasts. So you don't know, should you just wait and see and wait until it's over? Or do you need to prepare with new business models, new strategies? And in terms of investors, what I've seen initially in the second quarter of last year was that investors were basically standing still, pausing and just observing, seeing what's happening now, and what can we do? Because normal investors, especially early investors, and this, from Startup Bootcamp, angel investors, they like to meet the entrepreneurs in person, because it's a very personal relationship initially when you meet founders and you want to get to know them, you want to understand their vision. And all of a sudden we were not allowed to do that anymore. In lockdown, we couldn't meet in person. So the question was, for the whole sector, would we be able to move investment decisions online? Would investors be willing to invest and back in new startups which they've never met before in their life? And initially, I thought, that's a challenging task, because I never have seen that happening before. But now, a year later, I can say, yes, it works. People now make investment decisions without having met the founders in person. And we've started doing that, in the second half of last year. And everybody feels more comfortable doing it, because we have been becoming used to doing everything online. We're used to our Zoom meetings and to our webinars, and we're used to doing everything online now. So the resistance of making important decisions without meeting somebody in person, I think, has gone away. And that's really key for the investors, early stage investors, and for early stage startups who need the first rounds in this current environment. That's really important. I would say the second thing, what I've seen in terms of investors, is that later stage investors, have focused initially last year to back up their portfolio companies. Because the key thing was, let's ensure that our portfolio companies survive.
Absolutely.
That's, key priority number one, that nobody runs out of cash, because of course, everything came to a standstill. Often sales fall apart, sales deals fall apart, the pipeline got longer, or the sales timings, everything got delayed. And so the key thing was to make sure that your portfolio companies don't run out of cash by backing them, maybe with a bridge round. And so we've seen lots of, venture capital funds doing that, backing up and supporting their portfolio companies before looking at it onto new deals. And then I would say late stage investors, when we think about late stage VCs, private equity funds, who only invest in highly profitable fintech companies and late stage deals, I think they often also wait for distressed opportunities now, where companies do run out of cash, but still have got high quality companies behind it, but they are in a weakened position, so they need an injection of cash to survive. And then, of course, you can access distressed debt. You can access more distressed equity opportunities, which normally are at lower valuations, but these are a different type of investors who come in later stage to help out at this stage and it of course must be a good company still, who has got the opportunity to survive and thrive long term. Mm-hmm. But we've seen lots of movement, I would say, in the fintech sector in terms of investment behavior. But long term, the good news is long term, the fintech sector will continue to boom, and investors want to have a stake in the sector. So I think long term, the sector will be backed by investors all the way through, from early stage investors to late stage investors, like it has before. And so I'm very positive long term to know that we have got the financial backing, and our entrepreneurs have got the financial backing they need.
Yeah. So what you're highlighting is so true. I work with insurance companies, and usually when you work with insurers, I would say the sales cycle, the engagement cycle is very long. And so I would say with the crisis of last year going into this year, there is no doubt that some of the projects which were planned have been delayed. And insurers have been, I think, in some respect, focusing on digitizing processes which were still very analog, and they were able to actually see what didn't work for their clients actually last year. So some of the ventures we did very well were those who were doing automation, enabling engagement, like the simple chatbot, right? Did quite well. Automation, the RPA platforms also did very well to actually help with that customer engagement. Cyber security did very well. But then you have maybe some of the more longer term proposition which had to wait and see where the market is going to actually get to position and sell their platform, which means that I've seen amazing investors supporting those businesses as well during the past few months to make sure that they had the backing needed to progress to the next level. So, yes, so true. So when you look then at, we talk often about challenger banks, neobanks, and I would love to get your definition of what that is. And based on the conversation you have with a lot of us around the globe, do you see some parallels happening when you think about RegTech, when you think about InsurTech, even when you look at the AI trend, are you seeing challenger AI? Do you see challenger InsurTechs? What are the winning business model you are seeing emerging right now across the globe?
Good question, Sabine. And I would say, in terms of challenger banks, I think that we've got lots of great challenger banks out there. We've got lots of choice. And I wouldn't be surprised if some of our large banks would acquire a challenger bank, because it's much easier, I think, to acquire a challenger bank and then integrate this into a large brand bank with millions of customers than the other way around, than acquiring millions of customers into a new challenger bank. So I think I wouldn't be surprised more consolidation happens, in the challenger banking sector in the future. And I think that's, of course, for challenger banks, wonderful exit opportunities as well, because that's a great exit for the founders. I also think that challenger banks, in order to make money, need to move into the lending business. Because if you just take deposits, you don't make money, as you know. And the only way to make money is to provide loans. And lots of challenger banks don't have the capability of credit scoring customers. Are they credit worthy or not? And so I also think that we will see acquisitions in the future where challenger banks will buy lenders, to buy in this lending capability. And, I'm on the board of two companies who focus on lending. And it's a huge, unique capability to know whom, because it's always easy to lend money out, very difficult to get the money back. That's the hard part. And therefore you have to be very smart whom you lend money to, and you have to check continuously. And with AI, you can do that, obviously, and with open banking, are these customers continue to be credit worthy? And if not, how do you respond? And of course, there are fintech companies out there, who insure invoices as well. Mm-hmm. So they make the life of lenders easier because they actually insure the invoice. So the invoice is valid. Otherwise, it's insured by an insurance company. So So we've got, those fintech companies in this process between lenders and the end client as well. So I would say in terms of challenger banking, I would say we will see lots of movement. We will see banks be acquired. We will see challenger banks acquiring other fintech companies. So the exits, from a fintech company point of view are not just to banks, but to other larger fintech companies, so we see lots of movement there. I would say in terms of business models and what are the most successful ones, going forward across the various subsectors, which you mentioned, InsurTech or RegTech. I do believe that platforms, have got a long way to go, because platforms have got this huge advantage of being multi-sided, like we've seen, with examples like Airbnb, Uber, you've got your drivers on one side, you've got your clients on the other side. On a fintech example in the telecom sector, is a fintech company, they're called Lenderwise. They offer funding for telecoms operators. So it's a fintech company working for telecoms operators to provide cash flow funding. And again, they've got two sides of the equation. One side are all the telecoms operators who can't go to a bank to get loans because the banks don't understand the business. They don't understand the calls which have been done by this telecoms operator because they're all digital. They can't show it, they don't get a proof. It's much harder, while this fintech company can prove each call has actually been taken. They can go to the details. They've got this platform built, and then they've got investors on the other side to invest on their platform, for these telecoms operators. So I think these business models have got this advantage that you don't need much fixed costs. Mm-hmm. Of course, you need to develop the platform initially, but as soon as you've got that, you've got a competitive edge, because if you build both sides, of the platform, you make it very sticky. And if you continue to innovate, your platform is very highly profitable, for you as the platform owner, and it generates very nice profit margins. So that's, I believe, is a key, business model in the future, is really building an ecosystem around your organization and using platforms to support you, scaling up without having high fixed cost investments, and just being able to scale up globally, at lower costs.
Yeah. So the platform supported by the ecosystem to start challenging existing business model by looking at multi-sided business models. So a buyer, a seller, potentially an investor, like you have been building with the FINTECH Circle, leveraging your investor network, us as writers, but also the FinTech ecosystem to actually start driving value in very unique ways. One point you actually highlighted is banks cannot succeed. Challenger bank may not be able to succeed if they just focus on the normal bank account. So therefore they need to link lending and borrowing. And, Ant Financial has done that very successfully. Lending, borrowing, and just cash payments. So by combining different businesses together. So when you start looking at big tech, what are the big tech we need to pay attention to and be worried about?
Yes. So big tech, I think, is a huge topic, all these tech giants who are moving in. And when I think about, the Chinese tech players, as you mentioned, Alibaba, Ant Financial, Tencent with WeChat, these apps are, they are enormous. You can do everything on WeChat. You can do everything with Alipay. It's incredible, how powerful those apps are. And they're not just China focused, as we know, but they're across Asia, gaining market share. And even in Europe, they're gaining significant market share because all retailers who want to sell to Chinese customers, they install these payment options on their checkouts because Chinese customers or Asian customers want to pay with their existing payment methods. And so I think we will see lots of further growth, from Chinese and from Asian tech giants, but equally from the US tech giants. When I think about Amazon, Apple, PayPal, is one of the oldest fintech companies. I guess, I remember at Amazon, 10 years ago, I only saw them as a book platform, selling books online. Now they are providing more than £1 billion in loans to their merchants. So who would have thought that Amazon would provide loans? But of course, Amazon is in a much better position to provide loans to its merchants than any bank would ever be, because they can see daily what these merchants transact on Amazon. They can see the cash flow behavior, they can see how quickly customers pay them. So they've got this unique competitive advantage on data. And so these tech giants have got an enormous size, as we know. We always see the, Jeff Bezos as one of the richest men in the world now, stepping down and taking, a chairman role. But I would say, financial services companies don't have to be afraid of fintech startups or InsurTech startups or InsurTech scale-ups, but they have to be afraid, or at least watchful, what the tech giants do. Because I think the tech giants have got the same brand values globally. They've got often deeper pockets, to move fast. They've got often quicker technologies to deploy. So I think that's why I see such a great marriage almost, of financial institutions working with fintech companies, InsurTech companies, RegTech companies in order to compete against the tech giants. I think that's the way I see the equilibrium globally, because in order to compete against tech giants and how fast they move and how quick they are, you need the best fintech and InsurTech companies working for you to have a chance, I think, realistically, to really stay competitive long term. And so that's, I think, a huge dynamic which will become much more powerful, in the future, and very interesting for us to watch and observe. And I think for any leaders, in financial institutions, is one I would be most watchful and most concerned about, but not in a way of being still and just looking, but of taking action. I think if everybody needs to take actions now to change the business models if they think it's not future proof, and really building up your ecosystem, venture investments, building up your own ventures in-house, doing the right things to become a technology-empowered financial institution in order to really compete long-term successfully.
One thing, I've learned working with you and gaining your support when I was building Startup Bootcamp in InsurTech is that no one can do it alone. And you have to build your network and your ecosystem, support the friend of the family, I would say, because you never know where that could go. And one of the Chinese players I was fortunate and worked with on an event actually 3 years ago is Zhonghan. And the people I've met at Zhonghan, amazing people. They came to do an event in Copenhagen for me at the time. And what we talked about is that understanding of your core competencies, and understanding what your partner's core competencies are too. And they were able to build already 3 years ago, right, 300 partnership, that enable them to build their ecosystem, which enables them to, raise $1 billion, right? They raise, they were able to raise around 15 billion, and with now a valuation around, I think, 42 billion. And there were so many wise words that shared with us around how they see the future of lifestyle, the future of travel, the future of, the way we buy things, and connecting those different players into their ecosystem and valuation to make it super sticky. Your example around Amazon as well.
Yes,
so
that's true.
What would be, Susanne, your last few words for those listening to this webinar podcast series?
Yes, my I guess my last recommendation would be for all women listening to us, Sabine, is that fintech and InsurTech needs more women. Female entrepreneurs, female investors, female leaders. So if this sector interests you, please join, number one, and please show your skills, show your talents. The sky is the limit. Because we need more female diversity, and I think I know you, Sabine, and I, we both support women to come in the sector, to grow up and move upwards. And I think this would be one of my dreams, that we see our sector being more diverse. in all its aspects, and I would love to see more female entrepreneurs in CEO positions, more female leadership teams raising funding rounds successfully. So I think I would love to celebrate more female leadership, in our sector, and I think we, as I guess from a government point of view, from a regulatory point of view, and also from our points, as being organizations who support ecosystems and support, our ecosystem and our community. This would be one of my big goals, to have more female leaders in our industry who shine the way and show us what the future can do for us, in this sector.
Those are really wise words. More female leaders who actually build a platform and the ecosystem of the future. Maybe exactly. That is a goal and a mission we should aspire to uplift our colleagues in the sectors and the industry to aspire to do and be.
Yes, 100%. That's what I hope for, and I think that's what we should get to, because it will make the world a better place, 100%.
Let's make the world a better place. Thank you, Susanne, for spending some time with me today. I'm so grateful. And I look forward to doing that again, I hope, in the future.
Me too, Sabine. Lovely. Thank you very much for having me, and speak very soon.
If you like this podcast, subscribe now, share with your friends, and if you enjoyed it, please give it a 5-star review. Also, if you want to cover any specific subject with me, contact me on Instagram under Sabine VdL Officials or LinkedIn under Sabine VdL. Thank you.